This is the United States Energy Association Power Sector Podcast, sponsored by the Natural Gas Supply Association. I'm Herman K. Trabish. I've covered the power sector since 2006, and I currently report for Utility Dive. In this episode of the USEA Power Sector Podcast series on the natural gas turbine order backlogs and delivery delays, we're going to talk with Tom Harrison, Director of Business Development with the U.S. Thermal Division, power plant developer, Capital Power. We're going to talk about the energy sector market impacts of the backlogs and delays. Tom joined Capital Power just over 2 years ago as commercial manager of its U.S. Thermal Division and took over as Director of Business Development in May of last year. For that, after leaving the U.S. Navy in 2008, he'd spent over 14 years in engineering and then management with Midland Cogeneration Venture, working on power plant operations. So, Tom, what's happening with these order backlogs and delivery delays? Are you seeing them for natural gas turbines and power plant components that Capital Power needs? How long are the backlogs and delays?
Yeah, thanks, Herman. Appreciate the time today. And thanks for the robust introduction there. Really appreciate that. Um, so in regards to development work on the gas fleet in the US, backlogs in general, it's more systemic than just backlogs of equipment, but we can get into that a little bit later. Regarding the actual equipment backlogs, we're seeing, timelines right now. We're looking for gas turbines from the OEMs. We're in the, 36-month time frame, maybe 48-month time frame. So looking for some of these projects, we're expected to get gas turbines in the 28, if we're lucky, 2029 for the H class, J class units from multiple different OEMs. And so this isn't just OEM specific. All the OEMs are really kind of bogged down with their back orders, and it's really due to the tremendous demand in the energy growth that's being seen over the last 2 or 3 years, specifically driven by AI generation. Outside of gas turbines, there's other key components that are critical, and they have bottlenecks as well. You look at 345, 500 kV transformers, your lead times are upwards of 48 months. And, in the past, you could get one in about 24 months. So it really prolongs the duration. And it is the critical component to development activities on gas and renewable energies, AI development, data center builds, et cetera. And so you went from a timeline that was procurement was anywhere between 12 and 24 months to 36 to 48 months. And it continues to grow day over day as some of these production slots continue to get gobbled up by the bigger players. And so it's really reframed how you look at development in general. Essentially, you'd put together pre-feasibility, get to some sort of financial investment decision point to move forward. Concurrently, you were firming up design and de-risking the project. And now you're racing towards specs on heavy equipment and then building the design around those specs so you can get the production slot and hold commercial operation dates and the 5 to 6 timeline. So it's very interesting on where this is going in regards to gas and energy development.
Okay, we're going to get into a lot of that stuff. You mentioned the demand for electricity is one of the fundamental causes, but usually I find things are not just a single cause. Um, what do you have a sort of a list of causes for these backlogs and delays? And one of the interesting questions is you mentioned components, the transformers, and by the way, we've done a podcast on the delay in transformers. But what about other? There's a lot of components in a natural gas power plant. Is that are the OEMs, the original equipment manufacturers, are they having trouble getting the components to build the plant that they deliver to you? Is that where it originates, or is it, because that would be more like a supply chain cause, right? Or is it just the plant itself, the whole thing, being so many people want them that, and for what, electrification and AI data center
Yeah.
demand? I've mentioned a lot of stuff there. Maybe you could help me clean that up a little bit.
Yeah, no problem. So yeah, you're spot on. It's a combination of multiple different aspects. It's not just the OEM slow in developing. I mean, there's several pillars of supply chain that go into building a gas turbine or transformer, right? They have to source the materials, right? The casting, the forgings, the high grade electrical steel, get the skilled labor. You know, there's a big shortage in skilled labor. Everybody has been told to just go to college right out of high school, and we have a huge turnover in the workforce, welders, electricians, etc., that are key to building out these components. And so, another thing I would say is the OEMs, there's a little bit of hesitation. We see this demand growth. We've seen this back in the early 2000s, late 90s. There was supposed to be a big boom in, energy growth, and it never happened. And so these OEMs were caught with a huge surplus of inventory. And so I don't think it's just a supply and demand thing. I think it's also, material sourcing, skilled labor, the hesitation on investment to bring a process that's more robust so the production lines are producing more components for these gas builds. It's not just gas turbines, HRSGs, transformers, as we discussed. And, obviously the OEMs and the EPCs are making a pretty robust margin at this point. But they're not really not ramping up production because they don't see the demand there. It's just there's some hesitation, and if they scale and grow in the wrong direction, then they're not really going to be able to satisfy all the goals because of the source material that comes from overseas. It's not just from the US, right?
We're going to get more into that part of it in a few minutes, but before we go there, what has happened in terms of the costs for turbines and components and the prices that they charge to end users? Has that been affected? Have you seen prices going up? And more importantly, I guess to the average person is do you have estimates for how these backlogs and delays are going to impact the price of electricity that's generated by natural gas? Do you think that will, you know, that could therefore, if the price of natural gas generated electricity goes up, then will people start switching to, I don't know, enhanced geothermal or, wind and solar and batteries? What do you think is going to happen in that marketplace?
Yeah, so it's an interesting point. If we talk just about gas turbines, it's tough. You go to the OEM, you get a price, 3 months later, you get a different price, and it's not, 1 or 2%, it's 20 to 30% increase. And so,
Whoa, are
uh,
you kidding? How do
yeah,
you run a business with something like that going on?
like I said, it's super tough to put some of these projects together and do the valuation modeling, and then take that to an offtake and try to lock up a PPA or a tolling arrangement with the end use customer when the price pivots, right? And so the only way to really do that is to have a lot of capital, lock up production slots, and then you have this price point. Holistically, we've seen five 5 to 10 years ago, well, more around 5 years ago, you could build a simple cycle gas turbine peaker, for around 800 to $1,000 a kW. Now you're in the 14 to 1600 bucks a kW just for a simple cycle peaker to accommodate the fluctuations in load. Combined cycle with a steam turbine and gas turbine, you're looking, high thousands per kilowatt, 2000, maybe trickling above 2000. Again, the price change day over day. It's not just gas turbines, it's also the transformers. So they're affecting other forms of electricity. This trickles down to the end use residential customer. You're adding, 3 cents a kilowatt hour to their bill, right? So I would say there is an interesting aspect where gas turbines and the cost of the major heavy equipment becomes so expensive that it begins to compete with, like you said, renewable energies, BAS, geothermal, etc. Now, I would say that there is a true need for dispatchable, flexible generation. So that's going to outweigh certain attributes, huge load growth demand. And so you have to have the ability to respond on time. you also have to have the ability to support those load efforts at a base load power. You talk with some of these data center customers, they want 5 nines of reliability. You can't cut that with just renewable energy like wind and solar and battery storage. It has to be backed by something more realistic like gas or nuclear. You see a lot of nuclear, but nuclear is obviously way more expensive. I don't think gas would ever come to a point where it would be competitive with nuclear, increase to a point where it would have to compete with nuclear projects.
Mm,
Uh, you do see, gas with carbon captures trickling up, but that's a realistic expectation that you'd have additional costs on top of that. And so, long story short, I think also the other thing that's interesting is uh, the big beautiful bill, presents some challenges for renewable energies, and so if these costs for gas turbines and heavy transformers close the gap on competitiveness, now the production tax credits are going away. And so if they're not safe harbored or they're not in construction phase, a lot of those tax incentives are on the wayside. And so gas becomes more competitive again. So it's kind of cyclical. The one thing to note is, the big beautiful bill pointed it out for renewable energies, but for gas, this could happen in a couple years from now. And so when you're procuring a gas turbine and you're getting it 4 years later and the administration changes every 4 years, you could be stuck in a
right.
project where if you're not in construction, there could be some risk and some implications that go along with that. Now, the way to solve some of that stuff is to lock up power purchase agreement, tolling arrangements under contract with the expectation you're going to hit COD. So that's very helpful. But long story short, we see the prices increase. It seems like every time we go back to the OEM, and this is not just gas turbines, it's HRSGs, it's transformers, any material supplier, we see the price increase day over day. And the longer that you wait to lock up production slots, it seems like the price is just getting higher and higher. And that's mostly driven by supply and demand.
This episode is brought to you by the Natural Gas Supply Association, a DC-based trade association that represents domestic producers and marketers of natural gas. Natural gas stands out as a fuel of choice for America's energy future. It is affordable, reliable, and sustainable. Today, natural gas powers a growing share of industrial facilities, data centers, homes, and also supports the expansion of renewable energy. The benefits of natural gas rely not only on expanding our nation's energy infrastructure, like pipelines and storage facilities, but also ensuring regulatory certainty so businesses can construct and maintain this infrastructure. The Natural Gas Supply Association advocates for permitting reform to streamline the process for approving necessary infrastructure projects without compromising environmental protections. The natural gas sector has proven itself adaptable and resilient, meeting rising demand while maintaining affordability. By investing in infrastructure, embracing permitting reform, and fostering a fact-based regulatory environment, we can ensure that natural gas continues to be a reliable foundation for America's energy future. It is our responsibility to strengthen this foundation today so that we can meet the energy demands of tomorrow. Learn more by visiting www.ngsa.org.
Wow. Okay, that's a lot to take in, and I've heard from other sources the same thing. So it's a lot to take in that I can say isn't completely reliable information, and I really appreciate you delivering it, Tom. I want to just a couple minutes. I don't want to go deeply into this, but you mentioned 5 nines reliability, and it's something we've heard here on the podcast, and I've never taken a minute to explain to listeners. That means that 99.999% of the time, the gas plant turns on when you ask for it to turn on. Is that correct? Or generates electricity when you ask it to turn? Am I saying that correctly?
Yeah, that's exactly right. So they want a reliability standard 99.999%, right? So in other words, they don't want any outages. I mean, it would have to be a freak accident. And we design these projects around that. We build redundant transmission lines that are not in the same route, multiple different gas lines, water supply lines, etc., so that if something happens or a force majeure occurs on a transmission line, like you still have that capability to deliver power. And the reason for that is the computing power on the AI side, the data center side is, it takes a lot of computing power. And if you stop it midway, you basically have to start over, and all the downtime prevents it from answering the solution that it's trying to solve. And so it continues to grow and learn, etc. And so it's not like a Bitcoin mining operation where you can curtail it and turn it down. It's no big deal. It's pretty robust, and there's heavy LDs that come with this. And so the project needs to be sized accordingly. And it could result in multiple different gas turbines that are built over and beyond what you typically would build for, a 200 megawatt plant or a gigawatt plant. You're almost oversizing it if it's not directly connected to grid and it's going behind the meter in a co-location fashion.
Okay, there's a lot there, but I want to move on. We have one more question I want to get to, and a lot of the things you mentioned, we could take a whole podcast to discuss that co-location of natural gas, especially with these data centers coming online that have so much demand. But we're going to get into that in the future in the podcast. I'm going to have you come back and I'm going to have you explain that in detail, Tom. But
Sounds good.
let me just ask you one more question here. What is the fix for these delays and backlogs? You mentioned manufacturers don't want to accelerate production because they're going to get into a situation where they've got all this infrastructure and they've invested in it, but then demand drops off because maybe wind and solar with batteries in the next administration gets, their tax credits back, or and enhanced geothermal and new nuclear, those technologies are still have good tax credits and they're going to be building. They're not immediately available, but if you're waiting 4 or 5 years for a natural gas turbine, in 4 or 5 years, there might be a lot of practicality to just going with enhanced geothermal instead. And then, so those things could come into the market. What fix is there? Do you have any recommendations?
Yeah, Herman, that's a super loaded question. And one of the things we touched base on a little bit earlier was, changes in the administration. And so for somebody to build a project, they need some sort of long-term certainty. And for the OEMs to ramp up, they need some sort of long-term certainty that they're going to get paid for what they produce. And it's not just a federal government initiative, right? This is really a state with federal alignment that needs to happen. Case in point, the rules are different in Michigan or the rules are different in California than what the incentives entice federally. And unless there's an alignment and some long-term certainty, so that way we can lock up power purchase agreement with a end-use customer or tolling arrangement with a co-location load for long durations. And we understand that our assumptions that we make in the model in regards to incentives that promote the build are going to be there for the long term. We really can't build a lot of gas assets, and the OEMs can't build and ramp up production without knowing that there's long-term certainty. So policy reform's key on both the state and federal level. If the direction's towards carbon capture, obviously the OEMs can participate with their designs and have everything carbon capture ready, and potentially we can pursue that. Certainty with the AI load growth, locking up longer term contracts is great. And so that provides certainty and that trickles down the supply chain. There's not a single solution. However, I think, there's been this back and forth in the last 10 years, heavy emphasis on renewable development. We're going green. There's been some arguments about how that dispatches and how batteries can support it. But I think we need to change the perspective and understand that gas, flexible generation with dispatchability and potentially baseload operation needs to be a critical infrastructure and emphasized through the government policies. And if that is understood that it's going to remain in place for the long duration, then we can build out this power center in the US. and really attack this, and the OEMs would have certainties to continue to ramp up their production, and then that would trickle down to the sourcing of material, and they would ramp up their production, and then it all kind of aligns. So it's a true alignment.
Interesting. Yeah, and that, like you said, a lot of that can come from the right kind of policy that makes it clear that there's room for, as we say on the podcast, all of the above in the energy mix. Um, Tom, while I have you, I want to ask you something. It's a very complicated question, but literally just a short answer if it's possible, and please dodge the question, just tell me I'm wrong for even asking it for a short answer to this. When you mentioned carbon capture and you have the experience and know-how, I'm wondering, can effective carbon capture technology be sort of locked on to existing natural gas power plants relatively in a relatively straightforward way, or is it too complicated?
Um, Again, loaded question. Depends on the region. It's not too complicated. You can do that. Now there's some implications there. Aged gas assets have an expected useful life. So there's additional CapEx that would be deployed to bring those assets back up to speed. Depending on the area, you need a transportation pipeline to transport the carbon to the sequestration site. So that again is another chicken and the egg thing. A lot of pipeline developers that have reservation space, they have to put a lot of dollars in developing those sequestration wells and monitoring wells, and there's a lot of costs there. And so they need an offtake from a power user that captures the carbon. And so you have to go hand in hand with those and partner on a carbon capture project and then get the power deal. And the key with carbon capture, for it to work, it can't be peaking. Yeah, you can't put it on a unit that dispatches up and down. It has to be base load generation because a huge cost is the carbon capture portion of the facility. And in order to get the tax incentives through 45Q, you have to capture the carbon. So you have to demonstrate that you captured it and put it in the ground in sequestration. And you get about $85 a ton in return. And so you need to run the unit, supply the energy to the off-taker, capture the carbon, and then continue, essentially putting the project together in alignment with multiple different partnerships
Yeah,
to ensure that it pays for itself.
yeah, it sounds like a subject again for a whole podcast, and we're going to have to do that. But we're going to have to leave it there. I got to thank my guest, Tom Harrison, Director of Business Development with the U.S. Thermal Division of Capital Power. He's been really articulate in describing the order backlogs and delivery delays for natural gas turbines and turbine components and their causes and their impacts, and given us a peek into the future development of natural gas in the energy mix. I also want to thank our sponsor, the Natural Gas Supply Association. And as always, I want to thank our listeners for taking the time to check out the USEA Power Sector Podcast. Don't forget to subscribe, like, and share with everybody you know our quest for energy transition solutions.